Welcome back to another installment of Learn to Trade with Tony. And today we're going to be talking about the cup and handle pattern. It's a more well-known pattern, and we're going to talk about how to trade it, what are the entry points, what are the exits, and just generally how do we set our profit targets, etc. But before I actually do that, remember to hit the thumbs up button, subscribe to the channel if you haven't already, and also to hit the notification bell if you want to actually watch me trading these patterns and these strategies live. I go live every day at least an hour before the market. If you hit the notification bell, you will get notified before I do go live or when I do go live, and you can come and join me and watch me trading live on stream. So without further ado, here's the cup and handle. Okay, so the cup and handle pattern. Essentially, what the cup and handle pattern is it's a bottoming pattern and or topping pattern if you get the inverted version. Now you almost always hear people refer to the handle as a bottoming pattern. Essentially, what it is the market's doing this. Okay, it's pulling back a little and then taking off. That's the idea. Um, it's supposed to be like a teacup, and what happens is price kind of drifts sideways or does very little, and then it takes off a little bit, pulls back uh, like this, and now an uptrend or inverted cup with a handle looks more like this. Same scenario though. So how do we trade cup and handle? Well, we measure the move to the height of the cup, and then we just extrapolate it out. So that's your target. I have a pretty straightforward example here on the Disney 5-minute chart. Most of the time, when you hear a cup and handle, you're talking about the daily chart, but this is because it's more of a long-term trader's technical analysis tool, but it does work on smart short-term charts as well. You can see that we bottomed out here and we tried to form a cup with a handle, but it couldn't quite break out. So we did it again and it finally did so at this point. Okay. You have a target. You have 114.80, 115, say 50. So that gives you about 70 cents. So 115.60 would be your entry price roughly. And then you've got 1630, which would be your target. And funnily enough, that's exactly where you started the very next day. Now, if you're a day trader, you're probably already out at the end of the day. And you know you just didn't quite get that last little bit, but you've still got a nice move here. Okay, so cup and handle pattern can be quite tricky. The most important thing is that it's basically it's a rounding bottom or a rounding top, and then you get the pullback, and then an increase in pressure. It's very similar to a rounding top or bottom. It's just that this little bit extra, the handle, is where it's almost like a curved pole with a flag. Nonetheless, it's the same thing. It says that we're grinding higher and then suddenly picking up speed, which of course is a very bullish sign. Remember to trade the wick. And as far as stop losses are concerned, a lot of times what you'll do is you just put it behind the handle. So in this case, you would have gotten, say, 15.60. You would have risked about 20 cents or so, aiming for the larger move of about 70 or 80 cents. Based on this straightforward pattern, it's a very useful, particularly in higher time frames. It does work in smaller time frames, but it's a more reliable in higher time frame. And you can find these taking place. You know, it's a very well-known pattern, so it's very well traded. It is more reliable in the longer time frame, but you can use it on your daily setups. You look at the chart, you see a cup and handle getting ready to fire. You put your order in, you just follow right along. So you can use it as a day trader too.